Are you interested in understanding the connection between economic growth and policymaking? Economic growth is a crucial factor that influences many aspects of society, including the decisions made by policymakers and the operations of economic institutions. Join us on this journey as we explore the relationship between economic growth and policymaking, and find out how it affects the standard of living, government budget, investment, and more. However, before we begin our video, we would greatly appreciate it if you would subscribe to our YouTube channel and also press the bell icon. Let's get started. What is economic growth? Economic growth is a vital component of a thriving economy and is closely monitored by various stakeholders, including policymakers, economists, and investors. The increase in the production of goods and services in an economy over a certain period is an indicator of economic growth, which is measured by the gross domestic product, GDP. When the economy is growing, it leads to a number of positive outcomes for individuals and businesses. One of the significant benefits of economic growth is the creation of job opportunities as businesses expand and hire more workers. This leads to a reduction in unemployment and poverty levels, improving the standard of living for individuals. Businesses also compete for skilled workers, leading to higher salaries and better working conditions. A growing economy results in a wider range of products and services being available as businesses invest in research and development and expand their operations, improving the quality of life for consumers. Economic growth is critical for the success of an economy and has a significant impact on policymaking and the operations of economic institutions. The GDP provides a snapshot of the overall health of the economy and serves as an important indicator for policymakers to make informed decisions. The growth of the economy affects the government's budget, the level of investment, and the operations of banks and corporations, among other things. In conclusion, promoting sustainable and responsible economic growth is essential for the success of an economy and the well-being of its citizens. Influence of economic growth on policymaking. In addition, economic growth also influences the operations of economic institutions, such as central banks and financial institutions. Central banks, for example, use information on economic growth to determine the appropriate level of interest rates. If the economy is growing rapidly, the central bank may raise interest rates to control inflation and slow down economic activity. On the other hand, if the economy is not growing, the central bank may lower interest rates to encourage borrowing and spending. Financial institutions, such as banks and investment companies, also closely monitor economic growth, as it can affect the risk and return of investments. For example, in a rapidly growing economy, banks may be more willing to lend money, as the risk of default is lower and the return on investment is higher. In a slow-growing economy, however, banks may be more cautious, as the risk of default is higher and the return on investment is lower. Economic growth plays a crucial role in shaping both the policymaking process and the operations of economic institutions. It is a key indicator of the overall health of an economy and provides important information that is used by policymakers, economists, and investors to make informed decisions. Whether it's encouraging continued growth or boosting economic activity, understanding the connection between economic growth and policymaking is essential for anyone interested in the inner workings of the economy. Influence of economic growth on economic institutions. On the other hand, in a slow-growing or stagnant economy, banks may be more cautious in lending money, as they are more likely to face loan defaults. This can lead to decreased investment and slow down economic growth. Corporations also face challenges in a sluggish economy, as they may struggle to sell goods and services, which can lead to decreased profits and reduced investment. Financial markets may also respond negatively to a weak economy, as investors may become more risk-averse and less likely to invest in stocks and bonds, which can result in lower stock prices and reduced returns for investors. Moreover, economic growth also affects the distribution of wealth and income within society. In a rapidly growing economy, the benefits of economic growth are more widely distributed, as there are more job opportunities, higher salaries, and a wider range of goods and services available. This can lead to a reduction in poverty and an increase in the standard of living for everyone. In a slow-growing or stagnant economy, however, the benefits of economic growth may not be widely distributed, which can lead to increased poverty and decreased standard of living for some individuals and communities. The operations of economic institutions, such as banks, corporations, and financial markets, are heavily influenced by the level of economic growth. Whether it's driving investment, boosting profits, or influencing financial markets, economic growth plays a crucial role in shaping the operations of economic institutions and the distribution of wealth and income within society. Understanding this connection is essential for anyone interested in the workings of the economy and the role of economic institutions. Balancing growth and environmental considerations. Economic growth is a critical indicator of the overall health of an economy, and it has a significant impact on the standard of living of individuals and businesses. However, in recent years, there has been a growing concern about the impact of economic growth on the environment. As economies continue to expand, they can put a strain on natural resources, contribute to greenhouse gas emissions, and lead to other negative environmental impacts. As a result, it is becoming increasingly important for policymakers and economists to focus on sustainable economic growth, which takes into account both economic and environmental considerations. Sustainable economic growth involves balancing the need for economic expansion with the need to protect the environment and ensure long-term economic viability. This requires a shift away from short-term, extractive economic practices and towards more sustainable, environmentally conscious approaches. For example, this might involve investing in renewable energy, promoting energy efficiency, and improving waste management practices. By taking these steps, policymakers can help to minimize the environmental impact of economic growth while also promoting continued economic expansion. In addition to reducing the environmental impact of economic growth, sustainable growth can also have other benefits. For example, it can lead to increased innovation as businesses seek out new, sustainable technologies and practices. It can also result in improved social outcomes, as sustainable economic practices can help to create jobs and support communities. Finally, sustainable economic growth can help to promote long-term economic stability, as it reduces the risk of resource depletion and other environmental problems that can negatively impact the economy in the future. Sustainable economic growth is becoming increasingly important as the world continues to grapple with the challenges of climate change and environmental degradation. By balancing economic and environmental considerations, policymakers can help to ensure that economic growth is sustainable and responsible, and that it benefits both individuals and the environment. By taking a long-term perspective and investing in sustainable economic practices, we can promote economic prosperity while also protecting the planet for future generations. In conclusion, economic growth is a critical factor that influences the policymaking process and the operations of economic institutions. Policymakers must be aware of the complex relationships between economic growth and policymaking, and work to promote sustainable and inclusive economic growth that benefits all members of society. Whether it's encouraging investment, boosting job opportunities, or increasing the standard of living, economic growth is an essential ingredient for a healthy and prosperous economy. Thank you for watching this video on the relationship between economic growth and policymaking. If you found this video informative, please like, share, and subscribe to our channel for more videos on economics and finance. Until next time, take care.